Greetings, members, one and all of the Salivation Nation. Gold and silver rise as inflation digs in. Let's explore. Yes, we are starting to see some movements in positive territory, pretty substantial, with silver rising almost 2.3% on the day, over 50 cents as of the recording of this video. Gold is nearing a 2% increase, and that narrows the ratio between gold and silver down to 77.8, still fairly high, but we are seeing green numbers all across the board for platinum and palladium as well. In fact, the palladium is up $69, up over 3.4%. But let's take a look here. The reason why you're looking at the corner of a box is this is a pretty big box. I'm going to take this occasion to actually do an unboxing while I talk about the metals and inflation and why October is somewhat of an important month for precious metals, especially when we look at these numbers that have come out and how the markets are reacting here. So let's unbox this here. Gotta do it off camera because it's really awkward to do it on camera. You know, people don't really care these days about unboxings anyway. But take the occasion here. Pull these out. 1, 2, and 3. It was slow going, but we got the 2021 cheap packaging, the uncirculated coins from the United States Mint. So we'll pull these out and kind of look at those. Of course, the idea of the clamshell is gone for packaging, but nonetheless, here they are. We thought these were going to be shipping in December, but they shipped them a little bit sooner because I was late getting these. I think they're sold out by the Mint now, but essentially it's a silver eagle that's burnished and has a W Mint mark. That is not the W Mint mark, by the way. That is Adolf Wyman's signature. The W Mint mark is back here on the reverse of the coin, and it actually looks fairly decent. So I'm really pleased with this. Yes, indeed, of course. Hey, and amazingly, it fits inside the slot. Hey, who would have thought? They actually got this one right, fitting inside the slot there. So let's move that aside, and we'll pull some of these others out of here too, so we have something to look at as we talk about. But you know, the numbers kind of come out here, referencing an article here actually from Kitco that talks about this. They had signaled on Wednesday that they could start reducing its crisis-era support for the U.S. economy, and of course we know the supply chain issues that are running amok now, and that is causing some issues too. Joe Biden even talked about it in his speech today, that they're going to open up the ports 24/7 apparently. So see how that plays out. 24/7 ports, but there's a lot more than just that. There's other supply chain issues. That's just one link in the supply chain that's causing some issues here. In fact, we're hearing about some companies that are actually going about hiring private other services to get goods and services moving. Private issued, much more expensive services to get the supply chain working again. But we'll see. It's going to be very interesting to see how it plays out with the supply chain and with that having an effect on inflation. But the signal from the Federal Reserve is that they are going to, starting next month, potentially by the middle of next month, with a growing number of its policymakers worried that high inflation could persist longer than previously thought. There's no decision on a taper of the U.S. Central Bank's $120 billion in monthly asset purchases was reached in its September 21st to 22nd policy meeting. Participants generally assessed that, provided that the economic recovery remained broadly on track, a gradual tapering process that concluded around the middle of next year would likely be appropriate, according to the minutes of that meeting. With the economy set to grow this year at its fastest pace in decades, well, that's alarming to me. That's news to me. They say inflation riding well above the Fed's comfort zone, and the labor market much healed from the devastation of the coronavirus pandemic. Fed Chair Jerome Powell and his colleagues want to start cutting back on the bond buying program the central bank put in place to spur the economic recovery from the coronavirus pandemic. Policymakers discussed cutting the Fed's purchases of treasuries by $10 billion a month and those of mortgage-backed securities by $5 billion a month, said the minutes, which were released on Wednesday. Through several participants preferred a faster reduction. If a decision to begin tapering takes place at the Fed's November 2nd and 3rd policy meeting, the minutes said, the process could begin in either middle of that month or December. In a change from readouts of Fed meetings over the summer, policymakers were no longer described as generally expecting inflation pressures to ease as transitory factors dissipated. That's right. So in other words, it's here with us, I think. Instead, the minutes suggested that there were intensifying worries within the Fed over inflation, with most policymakers now seeing upside risks and some concerned about elevated inflation feeding through the inflation expectations or more broadly into prices. In fact, this has pretty much been confirmed through Social Security checks that have been out with over 5% for those. It's the largest in quite some time. Several other policymakers attributed upwards price pressures to pandemic-related supply bottlenecks that could be expected to abate. And with the wind down in asset purchases minimum, attention now shifts to the timing of future interest rate hikes. The Fed has promised to keep its benchmark overnight lending rate at the current near zero level until the economy reaches full employment, and inflation has not reached its 2% goal, but it is on track to stay modestly above that level for some time. The central bank set those parameters when inflation had been running below 2% for years, and the big challenge was seen as lifting it up rather than tamping it down. Now the opposite problem may be emerging as pent-up consumer demand fuels spending in a reopening economy, and businesses, hobbled by supply bottlenecks, struggles to keep up. And of course, we're getting close to the Christmas season. People want to be able to get their products. And by the way, that products also include this lovely metal here, silver. And silver is certainly something that people are going to be, I think, probably seeing some bottlenecks in terms of supply of finished products, and maybe the planchets along the happening during the course of production of these fine coins that you see before you here. We shall see. And referencing another article here, talking about, especially in terms of inflation, I liken the word transitory has become a swear word to the staff at Atlanta Federal Reserve President Raphael Bostic in a speech about U.S. inflation yesterday. I think episodic better describes these pandemic-induced price swings, said Bostic, a voting member of the Fed's policymaking team. And I believe evidence is mounting that price pressures have broadened beyond the handful of items most directly connected to supply chain issues or the reopening of the services sector. They argue for removal of the committee's emergency monetary policy stance, starting with the reduction of monthly asset purchases. So, a lot of things. Inflation is here, and it looks like it's here to stay, and that's having an effect as inflation digs in. And so silver is going to continue to do its thing and have an effect. As you look at these three silver eagles here, these uncirculated eagles directly from the United States Mint, you're talking prices that are, $60, $70 for these. I forget, maybe it's $67, $73, I think, is what I paid for these each. And I don't know what they're going for in the secondary market now, but that may become the real price of regular bullion. And these are not bullion coins, by the way. These are collector W-minted, uncirculated. And so these very well could be the new price of silver general bullion if we see supply chain issues. No matter what spot price is, demand could go to a point where these things become very, very expensive to obtain. Silver Eagles. You know, it's one of those things where the craziness of what we've been seeing with $10, $12 above spot for silver could come back. And if we have a rising silver price, I think that's going to increase demand, and quite greatly, because right now, silver's now recovered. Remember, it wasn't but maybe a week or so ago, maybe a little bit more, when silver was below $22 an ounce, below 22, and now it's well above 23. So you know, these wild movements for silver especially is something to behold. Quite interesting times we live in, and we could see an increased buying by the community or by people in general. I know I was at my local coin shop earlier, and they had mentioned that they are selling it as fast as it is coming in. They are seeing new people, new faces coming in to buy silver, and silver especially. So we are starting to see the market broaden. People are seeing what's going on in the economy today, and I believe that demand is still strong for this metal. And therefore, expect higher prices. No matter what spot price does, I would say expect higher prices coming, especially with what we're talking about with supply chain issues and what I'm labeling the silver squeeze 3.0. Just recently did a video about that. So there you have it. Let me know what your thoughts are in the comment section below. Silver is rising. Gold is rising. Inflation is digging in. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.